Hi everyone, you are watching Sinside, and today we are going to learn about the four frameworks of accounting. What are the four frameworks of accounting? Framework literally means pillars. What is meant by pillar? I think you all know the meaning of a pillar. A pillar is a structure which supports something, and this framework is also a pillar. These four pillars are the basic support of the accounting which stands in it. Let us disclose what are the four pillars of accounting, namely conceptual, legal, institutional, and regulatory. Let us discuss first about the conceptual framework. The conceptual framework, the name itself defines its objectives. The concept of accounting deals, it is the pillar of accounting. What is the concept of accounting? Concept of accounting is nothing but the objectives and fundamentals. What are the objectives of accounting? We all know the objectives of accounting is to disclose the financial information to the end users. The users of accounting may be internal and or external users. What are the fundamentals of accounting? The fundamentals of accounting deals with the concepts and principles. We all know that there are 9 concepts of accounting. Let us discuss later about it detailing. Now we have an idea that what is conceptual framework. Conceptual framework is the objectives and fundamentals. The objectives is to disclose the financial information, and the fundamentals is about the concepts. These objectives and fundamentals is used consistently to give a proper financial reporting to the end users. This is the main purpose of conceptual pillar. If the concept itself is unclear, then the accounting user may get confused or the accounting itself may be collapsed. Next, we move on to legal framework. What is meant by legal framework? Legal pillar is nothing but the legality, the government acts which supports the accounting. These these are some of the acts which supports the accounting. You can read it from your study materials. What are the legal frameworks? I can disclose some legal frameworks such as Companies Act 2013, LLP Act 2008, and Indian Partnership Act 2000. Sorry, it's Indian Partnership Act 1932. Okay, let us move on to institutional framework. What is meant by institutional framework? The name itself says this pillar is institutional wise. This Institute of Cost Accountants of India is an institute which deals with the costing principles, cost accounting standards. There are 24 cost accounting standards, which is developed by this Institute of Cost Accountants of India. Likewise, the institutional framework is the institution to develop the accounting. There are a Chartered Accountants Institute of Chartered Accountants of India, ICAI. It's very famous. They are literally making the accounting standards. Okay, let's move on to next. What is meant by regulatory framework? Regulatory framework literally means control or regulatory boards. Example, SEBI. SEBI is Stock Exchange Board of India. Stock Exchange Board of India deals with the regulatory or controls over stock transfers and this. IRDAI, Insurance Regulatory Development Authority of India. This deals with the insurance companies control. Okay. Likewise, RBI controls the money market, capital. These things are controlled by RBI, Reserve Bank of India. That's all for today. We have learned about the four frameworks of accounting.